short and sweet. So when you're talking about the fundamentals, basically you're talking about their financials. So like their financial data. In other words, do they got a lot of debt? Are they making a lot of money? Are they keeping a lot of money? That's all you really want to know. How much money you making? Out of that money you making, how much you keeping, and how much you owe somebody else. That's it. If I had to sum it up. So you basically want number one for them to be making profit, right? If they bringing in 10 million, but they only keeping 9 million, that's only like 10% profit. That's okay, but nah, we good. Because if anything happened, then that company can go out of business. And we'll get into that on the next video when we talking about the financial health of a company. Because they always gotta have some cash flow, something to fall back on. All right, so anyway, looking at the fundamentals, this is what you do if you got a trading view app. They can get downloaded for free. If you don't know anything about that, you definitely need to get into that. So let's take a look at it. When you go in there, you want to click on these three dots right here. When you click on those three dots, you're going to scroll down and you're going to see an option that says financials. And from the financials, you want to scroll down until, okay, this is it's just showing the capital structure. I'm not going to get too deep into that because I want to make it as simple as possible. So this shows you the amount of revenue and the net income. Look like you can't tell from there, but we're gonna look at it and see what percentage of all the money they get is profit. So if you're looking at this thing right here, you're talking about your PE. PE stand for price to earnings. PS stand for price to sales. Right. All right. Let me pause it right here. So right here, what you have is the meat. This is what we're looking for. How much money are they making? Which is your revenue. Out of that revenue, total amount that they bringing in, how much are they keeping? Which is the light blue. So it looks like they're keeping about what they're gonna tell you down here as far as the percentage. But if I had to guess, it looked like an eighth, right? So let me play it and see. Look like 1/8. Uh, so if I'm looking at this right here, let me pause this. This green line, this green bar represents the total amount of money they bringing in. COGA, COGS, it stands for the cost of goods sold, right? So this particular company, Caterpillar, is a big old construction trucks and vehicles that you see out on these real estate projects. They cost a lot to make. Out of all that money it costs to make it, just to let you know, okay, they selling these trucks for I don't know how much, but this is how much they keeping. So if I just know basic fraction, this look like a little bit more than a quarter of the gross profit. Then you also got to pay your employees. You got to pay payroll. You got to pay the loans, interest on the loans that you have, and then you left with your net income, which is this. So they bringing in 6 to 8 billion, but look like they left with about 8 billion, which is about 1/8. Like I said, let's see. Okay, yeah. So they bringing in about $9 billion out of 68, right? That's not bad. That's not bad. Now let me give you another company that I know got good fundamentals, and let's compare the two. So once again, you go down, go to financials, take a look at it. I'll wait when I can control this thing. Hold up. I'm gonna just take y'all through this. Okay. Okay. All right. Bingo. So let's look at what's going on right here. So you got your PE, right? PE stand for price to earnings. In other words, how much does it cost in relation to how much they're earning or how much profit they're making, right? You want that number to be low. You don't want that number to be high. So it's kind of like the inverse of what you're used to. You want that number to be low. And this is a great company because it was trading at almost 100 times what they was earning. Actually, it's 28 times what they was earning, right? And then now it's all the way down to, this can't be right. had it right the first time. It was trading like 100 times earning, and now it's down to like 30 something times earning, which is good for a growth company like this because they got compound growth. That blue line, I'm just explaining this, but you don't have to keep up with the PE and PS in the beginning. All right. When you want to be an expert at it, then you get into all that. But I'm explaining anyway. PS stands for the price to sales, talking about how much the company going for based on how much total revenue they're making in, not their profit, but how much total revenue. This number is going down even. Now, here's the thing. Here's the kicker though. But check this out. Now we're gonna look at the profit and how the company's growing. Two main things. This the main thing you're looking for. Is the company growing? Are they making money? Take a look at this. So as you see, the revenue is climbing big time. It's almost like it's doubling almost every year, right? In the last 3 years, this thing went from 30 billion to 240 billion. That's 8 times the amount. And the profit is doing the same. The profit probably look like it did even more. So, I mean, look at the numbers on this. It's a no-brainer, man. Let me pause this. Take a look at what you got. Look at this net income and look at the total revenue compared to the other thing we looked at. You see this? That's about 50 something percent. That's more than 50% profit. If this thing 120 times 2 is 240, that's 50%. So this got to be more than 50% right here. Profit that they making. This is a great company. Now look at these numbers. Remember how we had the revenue and the costs for the other company? Look at this. This is they bringing in about what is that? 200 or something. I said about 220 billion and whatnot. We're gonna see the exact numbers. And this is the cost of the goods sold. So the cost of they chips, GPUs, and all that stuff. This is what it costs. And this is what you got left over. Man, that's crazy. And this is and look at their employment cost, like as far as their employees. And I'm gonna show you. I said I was gonna make the video short, but I'm gonna talk about it. So this number is so small because most of this money is going to their payroll, but they don't have a lot of debt to pay. They don't have a lot of debt because they're a healthy company. They got a lot of cash stacked up and they're making all this cash. So that's the type of company you want. This is how you look up the fundamentals of a company. This is some great examples of some fundamentals for a good company. So I don't know how long this video is, but I think that's good enough for y'all for now. So try this on your own. Now you know how to research a company's fundamentals. Go get that money.